Strong Tower Financial Hour, where we help you tackle financial issues no matter how big or small. We help people go from being broke and scared to having hope with a plan. And now, here is your host, the owner and lead financial coach at Strong Tower Consulting, Justin Bennett.
And we are live here at the Webcast One studios. It is the Strong Tower Financial Hour, where we do help people from being broke and scared, and we give them hope with a plan. Thank you very much for joining us. We are glad you are here, and this is an exciting show. We're having a college theme hour during our show today. We have Adam Olbricht on with AL Wealth Advisory. We will be talking about different ways you can save for your kids' college, whether you're the parent saving for your children, or maybe you're a grandparent wanting to save for your grandkids. How can you save for your kids' college so they don't have to go into student loan debt? We also have a client with us today, Alex, and he's going to talk about how just in 30-minute conversation changed the whole trajectory of his career path in a way that I think will just be awesome, and you're going to want to hear it. And we're also going to talk a little bit more today, not just on ways you can save for college, but what are other ways that you can reduce the cost of college so, again, you do not have to use student loan debt. Well, our first guest with us today is Adam Olbricht with AO Wealth Advisory. Adam, how is it today?
It's a beautiful day.
It is a beautiful day. We should be golfing. We shouldn't be in the studio.
I know, but somebody scheduled this time, so I guess we're here.
That's my fault, I guess. Yeah. So saving for the kids' college, and I know it's one of the things with your clients that you work with a lot. How important is that as part of someone's financial plan to be saving for kids' college?
It's important, but we want to put it in the right priority. Having a good financial base is kind of first. Second is their own retirement. Then college comes after that. I know there's a lot of times of somebody has a brand new baby. They see this beautiful child. They want to provide everything they can for them, and they'll sacrifice their own financial future for the kid's college. There's other ways to deal with college, as I know we'll talk about, but make sure your own house is in order before you get way overzealous on their college.
Absolutely. The analogy I like to use is the airplane analogy. If you go on an airplane and they say, if we're going to crash, which is always kind of a scary thought, but when the oxygen mask comes down first, who do you put them on, you or your child?
Yep.
And the answer is you, because you need to have the oxygen to be able to give it to the child.
Yep.
And so that same philosophy is there. So what do you say to folks? One of the questions I was thinking about is there are parents, even single parents, who they feel guilty that they're not able to save for their kids' college. Should they have that guilt if they can't do it?
There's always going to be the guilt. I mean, is it warranted guilt? Probably not, because they've got to worry about their own financial future first. If they don't have a good roof over their head, putting food on the table, taking care of their own financial needs, getting that kids to college is going to happen later. There are scholarships, there are grants, there are ways that can be done without shelling out money from your own pocketbook, and there's also ways that kids can earn their way through college later on. So there's a lot more options on the college side sometimes than there is their own retirement and their own lifestyle.
Absolutely, and one of the things I keep thinking more and more about is if you don't have the opportunity to save for your kids' college, you probably have the opportunity when you have grandkids to be able to save for the grandkids. And there's nothing wrong. I'm sure you have lots of clients who do save for their college for their grandkids.
Yeah, and setting up things that are in the grandkids' benefit that maybe the parents don't even know about yet or will learn about later. Or I've had some people that have come along and said, okay, you've gotten to college. They want to make sure that they're good with their money. The student is, and good or bad, they let the student take out student loan debt, but then turn around and pay off that student loan debt for them in the end. There's some tricks that you have to watch out. You can't go over a certain dollar amount each year because of gift taxing rules. But it is a way that some people have done that to kind of force that kid to behave well with money first and then reward them on the backside.
Absolutely. So let's talk about for a moment, let's say someone does have that foundation in place. And of course, on this show, we always talk about the baby steps. So you have your consumer debt paid off. You have 3 to 6 months of emergency savings setbacks. So if a couple at home with a couple of kids, they have that and they're ready to save for the kids' college, what do you recommend or where do you recommend people invest their money to be thinking about the kids' college?
Yeah, the current popular one, started about 1998, is 529 plans. Comes out of section code 529 of the IRS code. And it's a way to save for college. So you put the money in. In most states, there is a small tax deduction for putting the money in. It's a state deduction, not a federal. And then the money grows tax-free as long as it's pulled out for college needs. College needs is room, board, tuition, books, pretty much anything that you can consider a college need. So that's the current popular way to do it in the state of Iowa. We have two plans. We've got one College Savings Iowa and one Iowa Advisor 529. So both plans have the state tax deduction, which is around $3,000 per child per donor. So if you have two kids and two parents, you can deduct the $12,000-ish off of your state return. And then you get the tax-free growth on that money till the child uses it for college.
Wow, that's cool. Now, another thing I've heard out there is the Educational Savings Account, the ESA. Explain what that is.
Yeah, it's kind of an older version of the 529. It came out when the IRAs came out in the 70s. You could put $500 into it. They've kind of amended it a little bit along the way. Sometimes you've heard it talked about as a Coverdale ESA. The difference between the 529 and the Coverdale is the Coverdale allows K-12 educational expenses, whereas the 529 is just post-secondary educational expenses. So that's one little difference. The challenge with the Coverdale is it's maxed out at $2,000 a year is all you can put into it. And there's also income limits. So if you are an upper income earner, you can't contribute to it. And it's the parents of the child being an upper income earner. So if grandparents wanted to fund one, they have to find out how much their kid makes. The 529s have really become the lead dog in the race, in essence, on this. ESAs work if you have a K-12 need, but remember, you can only put $2,000 in. Last time I checked, private schools in Des Moines were about $6,000 a year, so not an easy switch there.
Absolutely. So what about beyond the undergrad? So do the 529s, do they work for if I want to go for my master's or the doctorate? Do that work for the same, or is it just for the undergrad?
It's any post-secondary education. And so beauty school, diesel mechanic school, PGA golf school, Oxford,
I like
master degrees.
PGA. Let's just stop there. PGA golf school. I think that's good.
PGA Q school does qualify. So anything you can use financial aid for is what you can use the 529s for. And so it's a great benefit there. And also say kid does get a scholarship, gets a full ride. Well, the money's not lost. You can dollar for dollar take out of the 529 to offset the scholarship money that they get without the tax penalty. So there really isn't a lot of downside to having the 529, and you get a lot of options in the end. Can change it between kids. There's a lot of options.
Well, I'm glad you said they change it between kids, because one of the things I hear a lot when people are looking at going into a 529 or saving for the kid's college is, well, what if my kid doesn't go to college? Or what if one child goes to an associate degree, but one wants to be a doctor and one wants to be... How do you walk people through that? Because it's still worth saving for college, even though we don't know what their future is going to be.
Right. With a 529, you are the owner, so you control the money. So you have child number one ends up being a degenerate and doesn't do anything else, or ends up being Bill Gates and doesn't go to college. Either way, you're not spending money on college. And in those scenarios, you pass it down to the second kid. Leave the account in place for your grandkids. You don't have to use it up. There isn't a time limit on when the account has to be used. Worst case scenario, you take the money out and you pay tax on the earnings, not what you deposited, but on the earnings, and there's a 10% penalty on the earnings. So worst case scenario, you've had 18 years of tax-free growth on money that you have to now pay tax on. Not a bad scenario.
Especially if it's been growing over time tax-free, and that's just all that money that you're going to get. You're still going to come out ahead at the end of the day.
Yeah, and like I said, that's the last resort. Passing it to the next kid, passing it to the next generation is the better options in that scenario.
So are there any vehicles that you do not recommend in saving for the kids' college on?
Savings bonds used to be a very popular way to do it. You could put money in, it would grow. It's just the savings bonds rates are so low right now that it's not a great way to save for college. That's really the one that I hear that's out there. And then the other, sometimes life insurance comes into be as, put the money in, bank it, turn around and take it out. Well, the 529 has the same tax ramifications, plus you get a deduction over using life insurance. So pre-529, life insurance was a way to do it. Post-529, to me, it just doesn't work in the same way because you've got a better option.
Now, you have a unique spin on the whole when to pay your house off in kids' college, and I guess share that with our viewers. I just think it's an interesting way of thinking about saving for kids' college.
Yeah, and so if we kind of go back to the steps of take care of yourself, then take care of your kids, one of the things you could look at doing is instead of starting to save for the kid day one, pay off your house. Now, this works if you're going to pay off your house, say, when the kid's your oldest child is a freshman in high school. Now, you've got all the cash flow from your mortgage payment to start saving for college. So $1,000 a month, you start saving that away. when they're a freshman in high school, now you've got 3 to 4 years to start funding that college need and you're debt free. So instead of trying to do both, if you have the ability to pay it off sooner, that's one option for you as well. And I've got a couple people that they want to be debt free and they'll stay on the path of getting debt free if that's the plan. If I told them to, hey, let's split the dollars to the 529 and you'll pay off your mortgage when the child is maybe a junior in college, like, nope, we're going to stay zealous and pay off the debt first.
Wow. So, it's interesting. I ran some numbers here. If someone was able to save $100 a month at the average rate of the stock market, which over this lifetime has been under 12%, but I just used 12 for rough numbers, for 18 years at $76,000.
Yep.
If it's $150 for 18 years, it's $114,000. Again, rough numbers and average interest rates. We're not trying to get fancy here. So the bottom line is whether you're saving in 529, paying off the house, as long as your foundation is first done, which is, again, debt-free, money in the bank, and no more debt, this is a good way to save for your kid's future.
It is, and the current expected cost of, say, at Iowa State, my alma mater, about $120,000 for those under age 6 right now. So that's how much you would need to have saved up by the time those children are going to college at this point. There's a lot of expenses that go around that. There's a lot of ways that they can defer some of those costs. There's a thought, too, that, hey, when you're a junior or senior in high school, spend 40 hours a week as a job writing scholarship applications. It's amazing how many dollars per hour that's going to come back to you in the end in scholarships.
And actually, later on the show today, we're going to talk about that process of scholarship writing and how it's amazing. And if you were to actually put $1 per hour by what you get, you're actually going to make more money than your parents.
Yes.
How cool is that?
Yep.
So there's a saying out there that I've heard a lot, and I really heard it a lot when I was getting ready to go to college, and then I heard it later, and that is that it's better for the kid to pay for college because they'll get more out of it. Is that a true statement, you think?
You've had 18 years to fill into this child. In those 18 years, have they listened to you? Have they tuned you out? What's their personality? That's really what's going to affect that or not. For me, my college was unique. I had a 4-H project of a sheep project, and that's what paid for my college in the end. So 4 o'clock in the morning is what started paying for my college when I was 12 years old.
Awesome. Well, as you know, Dave Ramsey's in town tonight. Are you going to be there?
I will be.
Awesome. Well, we'll see you tonight.
All right.
Well, again, Adam Olbrecht with AO Wealth Advisory. Awesome talking about college and saving for kids' college. When we get back, we're going to have Alex, who in 30 minutes conversation changed his life forever when we come back.
From the RE/MAX Real Estate Concept Studios, this is Webcast One Live.
Drug and alcohol addiction slowly steals a person's identity, tearing away pieces of their life little by little until one day it seems like the hope of a happy future is gone and there's no chance of getting it back. Here at St. Gregory Retreat Centers, we can assure you that there is hope. Our unique approach to recovery begins with the understanding that the dysfunction and damage caused by addiction can be overcome, not just dealt with. Don't let another day go by. Call St. Gregory today.
My name is Justin Bennett with Strong Tower Consulting, where we passionately coach individuals, families, and businesses to make better financial decisions that help create success and eliminate financial stress. I offer a free 30-minute consultation where we find out where your situation is. I explain how I do my coaching services. Then it's up to you whether you want to continue. The Bible has, depending on who you believe, 800 to 2,000 scriptures that talk about money alone. So pretty important subject in God's eyes. That's one of the things that I enjoy doing, is help them see God's ways of handling money. It's interesting, most people that I ask, what would it be like to be debt-free? The common response is, I don't know. I don't think it's possible. But in 90 days, most of my clients go from, I don't think it's possible, to, I'm excited. In 2 years or less, I will be debt-free. There's no tricks, no gimmicks, nothing being sold here. It's just learning how to do money well. This is Strong Tower Financial Hour, where we help people go from being broke and scared to having hope with a plan.
Hi, I'm J. Michael McCoy for Adam Olbrecht, financial planner and AO Wealth Advisor. Adam, tell the folks listening today, just who is Adam Olbrecht?
I am a certified financial planner, and I created AO Wealth Advisory a couple years ago to be able to help people with their finances all the way from basic budgeting on to retirement and estate planning.
All right, now that we know who you are, what do you do? How do you help people?
I help people by focusing on 3 key areas, on what they earn, how they invest it wisely, and then also where they give it on, whether it's onto charity or onto family, but do it from a biblical base, using verses that have been around forever, transcendent knowledge that's been around 4,000 plus years.
Call Adam Olbrecht, a financial planner with AO Wealth Advisory. Give us your number, Adam.
Yeah, 515-224-7849.
Advisory services offered through Investment Advisors Corp., an SEC-registered investment advisor. Securities offered through Broker Dealer Financial Services Corp., members FINRA and SIPC. Thanks for watching.
And we are back here at the Strong Tower Financial Hour, where we do help people from being broke and scared and give them hope with a plan. If you missed our last segment, be sure to go on our website to check this out at strongtowerconsulting.com or our Facebook page at Facebook/StrongTowerIowa. We had Adam Olbrecht with AO Wealth Advisory and had a really good conversation about different investment vehicles that you can use to save for the kids' college if you have your foundation in place, which is getting your debt paid off, you have 3 to 6 months of savings in the bank, and you've got some money and your foundation is laid, and you want to look at investment vehicles like, say, 529 plans. Check out what Adam had to say. That was just a very good conversation there. Later on today's show, we are going to talk about different ways you can have your kid go to college to reduce expenses in like scholarships and work and all those things, and how do they work, and we'll cover that in the next segment. But right now we have Alex Fielmeyer with us, and you came and did a 30-minute consultation, and you got a lot more than I think you bargained for. But before we go into that, just tell us a little bit about yourself, where you're from, where'd you go to high school, and those things.
I went to Glidden-Ralston High School. It's in Glidden, Iowa. It's near Carroll in western Iowa. And I graduated there in 2008. I then went to DMACC in Ankeny. I went for 2 years because it's community college. I decided that it was a better decision for me because I didn't know exactly what I wanted to do. So by going to a community college, I saved lots of money doing it that way. I had a job while I was at DMACC as well. Then I went to Mercy College of Health Sciences here in Des Moines. And when I went there, I completed my healthcare administration bachelor's degree. And that's when I kind of met up with you. And at that point, I was 1 semester away from graduating at Mercy. And I got some amazing things from you. Yeah.
Wow. Now, you were working while you're going to DMACC. What job did you do?
I was a recreation facilities supervisor there at the DMACC Recreation Center. And then when I came and worked here in Des Moines as well, when I started going to Mercy, I work at the YMCA Healthy Living Center in Clive as a medical program instructor, personal trainer, and healthy living coach.
So tell the viewers, what was the original reason why you put your name out there online? I got your information. You said Justin Help. What was it that you were looking for guidance on?
Well, I went through Financial Peace University, and in going through the class and everything like that, I got a new understanding of finances and how it affects your future in unbelievable ways, even at such a young age. I mean, Adam was just talking about college and how important it is to plan for it. And I thought about it because I went to a community college and I decided to save money in small ways and have a job, but I really hadn't wrote anything on paper and decided, this is how I need to do things because this is how much money I can save. So I came into you asking, look, I have this plan. I want to go to physical therapy school, and I want to do so very badly because I want to help people. I want to continue what I'm doing in my health, fitness, healthcare type related field. And basically, I was scared. What I was scared of was looking at the sheet of paper that told me how much it was going to cost to go to physical therapy school.
How much, if you don't mind me asking, how much was it going to cost?
Well, I was fortunate enough to have scholarships, grants, and things like that, and working and taking correct paths through community college and stuff. So I was able to get out of an undergrad with little to no debt.
Awesome.
However, the grad program, 3 years, it was probably going to cost me about $100,000 to $120,000 just in the rest of the grad program.
So walk us through. You get this letter or this document that walks you through, and I'm visualizing this as I remember you showing this to me, and it has the $100,000 to $120,000 bottom line. When you saw that, what emotions did you go through?
Well, I mean, it's something that was in the back of my mind the whole time. I mean, you research grad schools and you do stuff like that, and at the time you're not really thinking about, oh, this is how much it's going to cost. You know it's going to be a lot of money. Everyone does when they're looking at college, but it wasn't until meeting with you when I really decided how unbelievable of a feeling it would be to get out of grad school with $120,000 of debt, and starting salary for a physical therapist in Iowa is maybe $60,000, and you think it's just not something that sounds like a financially smart decision.
Well, especially when you got a car to drive, a place to live, food, clothes, and you start adding it in there. Well, I want to read to our viewers an email that you sent right after our 30-minute consultation, and I wasn't expecting it. It made my day. I remember when I got it. It says, I want to let you know that your 30-minute appointment brought up questions in my for sure plan that shook me straight to my bones. I appreciate how honest and candid you were while talking to me about my financial future. In fact, it has brought me to explore other options rather than blindly taking steps into thousands of dollars of student loan debt. As much as I was taken aback by your suggestions not to go to school at this time, I may very well take your advice. In the last 3 hours after our discussion, I have actually rethought my entire outlook on the benefits of going into student loan debt. I will most definitely stay in touch, and you has changed the course of my future entirely over on a 30-minute conversation. So one of the things you said in there that I thought was interesting was you were relooking your entire outlook. So physical therapy, that was your original plan. What is your plan now?
Well, physical therapy has always been something that has excited me because I wanted to help people. It goes back to the beginning when I got my first few jobs and decided how excited I was about not only healthcare but fitness, and how it really is the future of healthcare to work with people on a preventive side of health, not just you're ill, now we're going to fix you. So something that always interested me while thinking about physical therapy school was healthcare administration. And in fact, I was going to do possibly physical therapy and then a dual degree with healthcare administration. So that was something that had always been on my mind. After talking with you, and I'll be honest, I mean, I left your office and I was going, oh, that guy, why did he tell me those things?
He's a dork.
Yeah. How dare he talk to me like that, you know? But yet it was so honest and straightforward. And after thinking about it, I thought, you know, this probably isn't the best decision for me. So I researched some more in my healthcare administration program that I was thinking about doing. And I really decided that, you know, I could make a huge impact on healthcare doing this. The business side of things is very interesting to me, as well as just the physical rehab side of things. So if I can, in a way, be educated on how to affect healthcare from a higher level, not just one-on-one, but really change things completely around. I mean, that's something that I'm very interested in, and something that I see being a great thing for my future.
Well, and I think what was interesting, too, when we had our conversation, we're obviously not going to disclose any dollars, but you had some money set aside from family who took the time to save the money for you. And I think part of it was you wanted to be a wise steward with this money. You didn't want to get this money that your family saved for, and then just it's gone.
Yeah.
So tell us a little bit about that.
It's you come into things and you think, well, I've got this money, so now I should use this to do whatever I want to do with my education. But then it comes to the point where you have to be smart about it. You can't just say, well, since it's there, I'm going to do what I want. Well, why can't I do what I want, but at the same time use it as smart as possible? And I think that's the biggest thing that I got out of our conversation was my family was able to save some money for me for college, and to just, as I talked about, blindly just kind of throw it away when the return on investment isn't that great. or I could do it as I am with the healthcare administration program. And I'm in the program now, and instead of going 3 years full time in a grad program, I'm able to go 3.5, possibly 4, depending on how quickly I take the courses. And I'm able to pay as I go. And I think that's the biggest thing. And education is changing to be more in tune to part-time students. It's not absolutely necessary to go all at it all the time. And I think that's probably one of the biggest things that I would suggest to younger kids is figure out what you want to do. And if you can have a job and work while taking classes slowly, think about the amount of money you can save just by not taking out student loans, accruing that interest on those student loans.
Yeah, you're absolutely right. And I think what we're both saying out loud is there's nothing wrong with getting education past high school, whether that's college or a post education or even just other programs. But it's about being smart with the dollars that you do have to use those wisely. I like what you put blindly. That is so awesome. So what would you tell other folks, because you did the 30-minute consultation, what would you tell other folks who have thought about coming to see Justin just to see what this is all about? What would you tell them that are kind of on the fence? How would you encourage them to give the 30 minutes a shot? Because it only cost 30 minutes and it didn't cost you anything to talk to me.
Yeah, I mean, Justin, I've never had a 30-minute conversation with someone that impacted me that straightforward, that hard, that to the bone, like I said. I mean, it was the easiest thing I'd ever done once I got there. I was kind of unsure about going and meeting with you, but as soon as I did, there's not a single thing that I regret about it, because I spent nothing, like you said. I plan to do some financial advising with you now that I realize how smart you are with it and how important it is to have a plan. And that's
I don't know about the smart part. That may have been just a good sales tactic. I don't know. Well, any other last things you'd like to give to young, I mean, you're already kind of doing earlier, but any last thoughts you want to give to younger folks who are thinking about their education that you'd like to leave with them today?
I talk to people about this a lot now, and it's really, it really comes back to going to school because you know what you want to do, not just going to school because it's the next step. I mean, so many kids get out of high school now and they just, well, I want to go to this university because it's different from my friends, or I want to go to this university because it's away from home.
Very good.
Yeah.
Awesome. Well, thanks for being on the show today. Now, you said Financial Peace University. Are you going to see Dave tonight?
I don't have tickets, so I won't be there. But
well, if I had some tickets for you, would you go?
I probably would.
I got tickets.
No way.
We'll talk.
All right.
Well, thanks, Alex, for being here on the Strong Tower Financial Hour. When we come back, we're going to talk to you about how you can save for college without going into student loan debt. No student loan debt. Let's quit doing it. Come back after this.
Leach, owner and general manager of Service Legends. I brought along a couple of the home comfort heroes.
Hi, I'm Tammy Wells.
I am Nick Wondershide.
I'm administrative manager
I am the senior technician
from Service Legends.
It seems like every good thing, when you feel it to the bone that it's good, there's a lot of hard work put behind it. I don't think that you can fake it and have it turn out good.
You know, if we seem like, okay, that's just weird, it's just a furnace, why would you believe so deeply in a furnace? It's not just that, you know, we want to show the world that you can have good service.
Yeah, I mean, it's got to be, it's your home.
You know, it's built into our daily trainings, it's built into our culture, that we're going to do whatever it takes to have each client say they love us, period.
That's why we spend all the hours in the training that we do. And if we guarantee it's going to be a good experience for you, or else it's free, what type of work do you think we're going to do?
There is a guarantee.
Temperature selection guarantee, fixed rider it's free guarantee, comfort guarantee, best value guarantee. All of these guarantees hold us accountable to ensuring that we exceed your expectations. And if for whatever reason we'd fail and we can't make it right, we guarantee all of those guarantees with a 100% money back guarantee.
I mean, if you don't think that your technician can fix it right, are you going to say that to a client? No.
You don't have to worry about having a technician come to your house.
We drug test, background check all of our team members. We put safe people in your home. Each and every one of our service techs, 400 hours a year in training.
You tell it the minute they walk in the door. They know what they're doing, they've done their homework, and they actually truly care about what you want.
Because at the end of the day, you're the person that makes sure I have a job.
They're going to be listening. They're going to want to know what your challenges are. Then they're going to come and give you options, and you get to choose.
If I'm there to help and I make it easy and painless, I did my job right that day.
Well, when it comes to your comfort, safety, and your family. You know, you don't necessarily go buy the most expensive, but you get the most bang for your buck.
Oh, it's worth it because there's a lot of people that will find a way to get it to work right now and then leave and then come back, charge you again, and the cycle just repeats itself. So when I'm out there looking at the furnace, I want to find why it failed today. How can we change the part today with something that you're not going to have to worry about? Is it worth changing the part today? I mean, you can put a lot of money into a furnace. I can fix parts all day. There's good job security in that for me, but is it the right thing for you?
I get a lot of the phone calls of after the technicians are there. They're just in awe. They're like, wow, you guys are great. I mean, I don't even know what to say. You guys are great. Everything you did was perfect. It was great.
Keep going though, I like this.
Just give us a try. I'm gonna take all the risk.
I've got the time to make this right. I've got the support to make it right.
Just check us out.
And if you don't see the value in what we do,
I mean, fixed right or it's free or 100% money back.
enough said.
From the RE/MAX Real Estate Concept Studios, this is Webcast One Live.
Because I heard you say there's gonna be brighter days. There's gonna be brighter days. I won't stop.
Financial Hour. I am Justin Bennett, your host. Thank you again for joining us. Wow, we've had a great show so far today. We had Alex Fielmeyer on, who went through our 30-minute consultation. And if you missed just how that changed his life, be sure to check out this video. And we also had Adam Obrecht on with AO Wealth Advisory talking about proper investment vehicles when it comes to saving for your kids' college. This is a college theme hour today. And if you missed any of the past segments or any of the shows, you can go on our Facebook page at facebook.com/Strong Tower Iowa, and we'd love for you to check out some of those past videos. There are lots of information there for you. As a part of the show today, two things. One, later in the show, I'm going to show you my actual personal story. Dave Ramsey's in town tonight, and I'm just going to share how he changed my life and why I'm here. And you're probably thinking, thanks, Dave. Now I got this other personality on the air. But also want to talk to you today about college. It is probably the next big bubble, the burst. We had the housing bubble, we have all the student loan stuff going on, and there's this kind of thing in the air about college. And so first, what I want to do as a part of our time here is talk to you about different ways, if you don't have the 529s or the cash saved up past from college that we talked about in the first segment, I want to talk to you about some ways that you can save for the kids' college, or if you are a person that's looking to go to college, so you don't have to go into student loan debt. One of the ways is scholarships. Now, we've all heard about scholarships, but unfortunately, no one's doing it. Very few people are taking the opportunity. There are millions and millions of dollars all across the country in ways that you can file for scholarships. I even heard the other day, I haven't found this out as far as researching it, but even at 5 years old, you could have your 5-year-old write a little paper to Crayola. Crayola is offering scholarships, and for 5 and 6-year-olds, I mean, they're out there everywhere. If you just Google scholarships, lots of information. There's also folks out there that will help you write scholarships to make sure that you put in the right things to give you the best chance to get those scholarships. Well, you might be thinking, well, it's not my time, especially if your parents are going to make you do the scholarshiping. But think of it this way. I was talking to a fellow friend and financial coach out in Colorado last week, and she was telling me about this. She has a huge passion and heart for college students, and she was talking to an 18-year-old, and he had an opportunity to apply for a $300 scholarship. Well, $300 doesn't sound much when your average cost of college can be anywhere from $40,000, $60,000, $80,000. $300 doesn't sound like a lot. And she said, well, how much time do you think it would take to complete the scholarship application and all those things? In about 3 hours. Okay. Well, you just realized that if in that 3 hours of work, you get a $300 scholarship, you just made $100 an hour. That $100 an hour is probably more than what both your parents make combined. I was actually figuring this out the other day. I think if it's $100 an hour, if you could make that as your per hour, that's like $208,000 a year. Pretty sweet. For one scholarship, 3 hours, $300. Heard of another story where a woman or a young lady, as going her junior year, going into her senior year, that summer between junior and senior year, you heard Adam on the show earlier talked about take part-time for the summer in writing scholarships. Well, this young lady did that. She actually took basically the full summer and wrote 1,000 scholarship applications. That's a lot of scholarships. She heard back from 38 of them and got $38,000 And back then, $38,000 could cover about everything for room, books, tuition, the whole 9 yards. So do not overlook scholarships. There's just a lot of information about scholarships. Another one is start local. I mean, we heard Alex when he was on our segment earlier, he went to DMAC, a local junior college. Nothing wrong with going to a junior college. Nothing wrong with going to a local in-state school like Iowa or Iowa State for us in Iowa here versus, well, I need to be an Ivy League or I need to go to a private school. And there's nothing wrong with those. But if you don't have the cash, look at going to a junior college first, especially if you're not sure what you want to be. There's a lot of people going to school right now with their education or their degree going to be, I don't know. So go to a junior college. There's nothing wrong with that. Go in-state for a while. Figure out what you want to be and spend more time figuring that out than spending the dollars to go to the school of choice. Here's one that gets often overlooked a lot. Getting a part-time job as a student. Getting a part-time job is huge. And I know the big thing is, well, I want to study while I'm in school. I know what most kids do at college. I was at college. Studying's not always what kids do. I think we know where that's headed. The other part of it is that if you get a part-time job, studies are now showing that you actually have a higher % chance of graduating by going to a part-time job, and you usually have a higher GPA. Why is that? Well, if you have a job and you have school, you have to learn a thing called time management and learning how to set priorities. Guess what? When you're an adult, you have to set priorities. You have a family, you have a job, you have a church, you have things you want to do, vacations, and to prioritize. So you're getting to learn how to prioritize and set your time management schedule while making some money. And you can use that money to go towards books or go to a college. But what if this? For me, for example, you're going to hear my story here in the next segment, but what I did is I actually found a full-time job while I was going full-time school in the field I was going to go in. So I already was building my resume. I was networking. And so when my fellow peers graduated, I already had the job. I already had the resume built. I was further in competition. I'm not saying to brag about me, but thinking about that for you. Especially if you can find a field of choice, you're networking, you're making money, and you can use those dollars to pay for the college education. Another way you can save money when it comes to college is you can live at home. If you happen to live near home, live at home or live in the dorms. Too many times I'm seeing more and more kids feeling the need to live in these high-end luxury apartments near campus. I don't know why. That's a lot of money being wasted. In fact, one of my roommates, I had several different roommates in college. One of my roommates lived and grew up a block away from the college, but had to go live in an apartment. I was going to a private business college, so it wasn't expensive. It was pretty expensive as it was. And so when it comes to housing, don't worry about the high-end side of that thing. The other things you can do, again, is start local. We talked about that. Now, why am I going through this? I wrote a blog a while back, last year actually, 2 blogs. College and student loans. Is it worth it? You know, it's interesting. If you ever read the book, and I recommend to always be reading, sadly, a lot of people go to college and then the moment they graduate, they quit reading. Leaders are always readers. You want to read. And one of the books I read that I thought was interesting was called The 2-Income Trap. And the whole book was about why dual income really isn't as smart long-term and how much money actually gets blown away. But the one thing I pulled from the book, even though that wasn't the goal of the book, was this. 97% of Americans believe you need to go to college to be successful. That's almost 100%. 97% of Americans believe you need to go to college to be successful. But here's the sad reality. Let me show you some statistics. 54% of new college graduates are underemployed or unemployed. 39% of federally backed student loans are deferred or behind. Last year, we hit the $1 trillion mark in loans outstanding owed to the federal government. $1 trillion. And 39% of borrowers to those dollars are deferred their student loans or they're behind. Wow. The average consumer has just under $30,000 in student loan debt. Tuition average increase of 8% a year, which means most colleges double their cost in 9 years. So in 9 years, if your college expense was $40,000, 9 years from now it would be $80,000. That's how fast it is growing on average. But here's the one that just really shakes me up here. Only 54% of students that start college end up with a bachelor degree within 6 years or less, which tells me 46% of Americans either quit and didn't get their bachelor degree or it took longer than 6 years. Well, and I can tell you that's true in our house. For me, I went to a private school, got my associate degree, did that. But when I went to my bachelor degree, I quit. And I quit for other reasons you'll find out in the next segment. But then my wife, she was a single mom with two kids, and she took 6.5 years to get her bachelor degree. And the reason why I'm going through these stats is not to nail college as bad. I think college is great. I went to AIB College of Business. I think it's a great business school. But here's the challenge. I get the opportunity to counsel many people who have a lot of student loan debt, and they're crying because they can't pay for their family's basic needs, and they've got a lot of debt. I mean, I just had a client just the other day that I signed up who had over $150,000 in student loan debt, not counting all the credit card debt, not counting all the car debt, just in student loans was $150,000. You know how much they made together as a couple? $83,000. I'll never forget one time doing a 30-minute consultation similar to Alex, who's actually some good friends of mine. And one of the questions I ask in my 30-minute is, when you think about your thoughts and emotions that right now with your current financial situation, what are you going through? And when I got to the husband, a good friend of mine, he just started trembling and shaking and just all of a sudden tears going down his face. I mean, he was bawling as if his dad just passed away or something. And I mean, it was for 5 minutes. His wife and I were just like, where did this come from? And finally, when he had enough ability to start talking, it was, I don't feel like I can take care of my family because of the weight of all this debt. I'm trying my hardest to take care of them, but I can't. And what was really interesting is I do speaking engagements all across the state of Iowa for different reasons, and I was invited to go to speak at Iowa State in one of their finance clubs, and I was more than happy to come do it, and I was doing one of my presentations on budgeting and saving for emergencies. And what was interesting as I was having this conversation, I didn't think about this, that there was probably going to be a financial professor in the room. And most financial professors don't see eye to eye with how I believe finances should be. And so I got done with my presentation, and I had time for Q&A, question answer, and the financial professor raised his hand and so, are you saying that all debt's bad? And I said, well, except for a mortgage, I'm not a fan of any debt. That's correct. Well, what about student loan debt? Isn't that good debt? I mean, isn't it worth going in debt $30,000, $40,000, $50,000 to make $80,000 to $100,000 or more a year? And I sat and paused for a moment. And that same emotion that my friend had, I was starting to have. I was starting to get just teary-eyed almost, and I was starting to shake because and it wasn't even planning on that. And I was starting to feel the weight of all the clients that I've ever met with and all the student loan debt and the student loan debt my wife and I had when we went to college. And I said, you know what? Most financial professors won't like my answer, but I don't believe in student loan debt. And I went through some of the stats I just mentioned to you guys. And I said, you know, I'm the one that gets to counsel all these students that graduate 3, 4, 5 years from now when they're trying to raise a family and the plans didn't work out as they thought. I'm the one counseling them how to pay off the student loan debt. I'm the one seeing the stress, the pain, the frustration. You guys don't see that. All you see is GPAs and degrees. And by the way, only half are graduating. Wow. So again, I'm not against college, whether it's private school, getting a doctorate degree, I don't care. It's, do you have the money? Show me the money. Do you have the money for it? If you have the money to go to college or you can work to cash flow college, it's a great way to do it. When we come back, we're going to share with you my story. How did I get wrapped up, number one, in coaching, but how did I get out of the debt and do the things that we're doing today? When we come back on the Strong Tower Financial Hour, where we'll help you from being broke and scared and give you hope with a plan.
From the RE/MAX Real Estate Concept Studios, this is Webcast One Live.
Hi, my name is Steve Bensmo with RE/MAX, where a house becomes a home. And when your host, Justin, wanted to sell his home, he gave me a call. I want to share a little bit about my buying philosophy when I work with home buyers. I always want to make sure that people are taking into consideration what home they can afford, not what home they think they can afford. So I ask a question around if they've really looked at what their budget looks like for buying a home. And there's for two reasons. One, I do not want my clients calling me in 2 to 3 years to do a short sale. I want people to be able to order pizza on Friday night and not be worried about the mortgage on Monday. So if you're looking for a home to buy and you want someone on your side to make sure you're buying the right home for you right now, give me a call at 515-257-6531. Again, that's 515-257-6531. Or check me out on Facebook. Again, I'm Steve Bensmo with RE/MAX, where a house becomes a home, and I'm looking forward to working with you. Thanks.
At Conroy Insurance Services, LLC, we help families and business owners protect their most valuable assets. We have established an excellent reputation with our clients, and we will continue to strive to exceed your expectations. Our talented team of insurance professionals are always available to assist you, and that is why we are independent, trusted, and preferred. Hi, I'm Bob Conroy. Contact me for all of your personal and business insurance needs at conroyllc.com.
And we are live back here at the Webcast One Studios. This is the Strong Tower Financial Hour. I hope so far today you've been able to get a lot out of this college theme hour, where we had Adam Obrecht on our show at the beginning of the show. We were talking about different investment vehicles if you have your foundation laid. Again, your foundation being you have money in the bank for emergencies, you have no debt but the house, and 3 to 6 months of savings. If you've got that, how can you begin to save for your kids or grandkids' college? We also had Alex Fielmeyer on earlier, a guy who went through our free 30-minute consultation, and just in 30 minutes of just some real talk, and I wasn't rude to him or anything. I treated him with the respect that I would want to be treated as well, and it just changed his life because common sense is common sense, and you can't change that. And versus going in, I mean, did you hear it? He had a $120,000 post-undergrad bill if he wanted to go become a physical therapist. He still wants to go do that down the road, but he's going to pay for it versus being miles of student loan debt. And then the last segment, we talked about how else you can do it, like scholarships, part-time jobs, doing the junior college at first, and living at home or living in the dorms versus these high-end apartments and those kind of things. Well, I don't know if you know this, but today's a big day, or tonight rather. Dave Ramsey, the big personal finance guru, is doing his Living Legacy Tour. Him and his daughter Rachel are going to be here tonight right here at the Civic Center. Found out this event sold out in record time for them. So good job, Des Moines and Iowa. We are on the map for Dave. And the reason why I bring that up is Dave Ramsey is the reason why I have this show. Dave Ramsey is the reason why I help people do financial coaching. So I thought, in honor of him and honor of what we're doing here, I would just share my story, how it changed, since he's going to be here today or tonight at the Civic Center doing his Living a Legacy Tour. Again, him and his daughter Rachel, looking forward to it. Sold out immediately when it went on sale. My story, I grew up, and by the way, my story I'm going to share is not some 2-minute elevator story. I'm going to give you some details, and it's going to be a little bit of links. So get some popcorn or your pop ready, and here we go. And so I grew up in a small town in southern Iowa where I always like to say there's more cattle than people. And I love my town, love going back there when I get a chance. And my wife and I are both from there, actually. And I remember growing up, we didn't have a lot. I mean, we weren't dirt poor, but we weren't filthy rich by any stretch of the imagination, and didn't bother me any. And when I grew up and went to high school in the same place, so lived in the same place 18 years. And I remember, as I think back now, I was getting ready to go to college, and I'm the oldest one of 2 kids and getting ready to go to college. And I remember my dad, and we never really talked about it. He just passed away a month or so ago, so I'll never get to ask, unfortunately. But I remember watching him have a struggle with seeing his son go to college because he saw the importance of education. He saw the competitive value of having an education. But common sense and just watching others, he saw a lot of other folks who were going to college for X degree, but doing Y job. And my mom, love her to death, was a great example. She went to school to be a beautician. She's a publisher of a newspaper and does a great job, but totally two different things. And that's still true. A lot of that happening. But the other thing my dad was seeing was a lot of people were going to college and not finishing. Well, now you got all the student loan debt. And if the parents sign for it, the parents got to pay for it. And if they don't, the kids got to pay for it. And that's not good with kids straddled with $30,000, $40,000 in student loan debt to get started. It's not good at all. And so I went to college, went to a great school, went to AIB College of Business here in Des Moines. And if you can afford it, I recommend doing it. It's one of the best business colleges out there. I think it's great. And I went there for my education, and my degree was both in business and computers because I wasn't sure. I wanted to be in business, but also had a desire for computers. I got a chance to build our school's first website because the internet was brand new. And so I wasn't quite sure what I wanted to do. Later, I really leaned in business, obviously. But pretty quickly, I got a full-time job. I did get a full-time job with a principal here in town in the business, in the mortgage area. Actually, 2 steps away from the studio, believe it or not. It's kind of funny I'm talking about it. And so I had a full-time job and full-time student. This is before I knew any of this stuff. And the sad reality as I look back now is I could have cash flowed college with my full-time job and they paid tuition back and I had a few scholarships and those kind of things. So I graduated from college, just starting my career in business, and I'm doing that at the same time. And not long after that, I married my beautiful wife, Jessica, and she had 2 kids from her first marriage, so all I had to do was add water, boom, instant family. And it was pretty evident at the start. We both brought in our own student loan debt and our own credit card debt and other debts. We weren't starting off on the right foot financially. And I'll never forget when my wife made the comment, I've been hearing about this guy named Dave Ramsey. Let's give him a shout. Let's read one of his books or something. And I was young, arrogant, thought I knew it all banker. And I don't need to read no Dave Ramsey. And I wasn't mad at the guy, never heard of him, just didn't want to hear his opinion. I thought mine was best because I knew me and I thought I knew it all. Well, after we bought our home and we just had our first child together, so now we have 3 kids and we bought our home, we had to have a house now that we're having more kids and we had to get a bigger car because we got more kids. And so we went into loan for a car and we got a huge loan on a house and we didn't want no cheap house and we got the most house that we could afford. So we thought based on the pre-approval, and I was in mortgage too. How ironic was that? But here's the interesting thing. 2 weeks after owning our home, I realized we made a huge error. I realized that not because of math, although that was later, but there was this burning gut feeling, we did something wrong here. This was not smart, whatever this was, which was getting the house. And for the first time ever, and this is again before I knew who Dave Ramsey really was, I can tell you in the living room where I was sitting, in the chair I was sitting in, I got out a yellow pad for the first time. And I wrote down the income coming in and the expenses going out. Just the minimum payments, minimum food, minimum fuel to get by. And I'm like, oh my goodness. Called my wife into the living room and I said, honey, we got a problem. She's like, what's that? I said, do you realize prior to buying this house, we were $200 short a month? That's why we had to use overdraft protections all the time or credit cards to kind of catch up at the end of the month. I said, now we're $700 short a month. And there's no money now for vacation, no money for gifts for birthdays or Christmas. There's no money for clothes. There's no money for car repairs, for house repairs, for saving for retirement, saving for college. And that explained my burning feeling of what just happened. And we came this close within 2 weeks of calling our realtor to say we need to sell this house. And we should have. That would have been the smart move. But we were too prideful. We wanted to find a way to do it. Well, I didn't know this, and I was blessed. God blessed me with a job 3 months later that doubled my income. So get the scene. Before that job, we were like underwater. We were drowning fast. Getting that job, we could just barely breathe. We were just barely high enough where we can kind of see. And I did the bright thing that everyone does when you kind of get in that position. I thought, you know what? I need to go back to college. I need to get more of an education because if I get more of an education, I can get a better paying job. If I get a better paying job, we can get out of this mess. Well, as I was going back to school to get my bachelor degree, I didn't finish, and here's why. Because as I was going through and getting more student loan debt, and part of the reason why I got more student loans and went to school, so I could defer my student loans. Stop those payments, stop the bleeding. I figured I can get the education right. But the thing that I was starting to realize is I'm taking time out of my family to study while I'm going further in the debt. This just seems backwards. This just seems wrong. Nothing wrong with going to get an education. Nothing wrong with getting a higher paying job. But I'm going into debt, and I didn't know why, but it just felt wrong. And then I looked on our TV, and we had 18 different TVs, or we didn't have 18. We had a lot of TVs, and they all had DVR receivers. And I looked, and there it was, Fox Business. It was the very first time that channel came live, and primetime TV was this bald-headed guy giving financial advice named Dave Ramsey. And the first 2 seconds, I was hooked. It was common sense driven. It was, wow, oh my goodness, he's making a lot of sense. And I'm an all or nothing guy. So I am eating all of this up. I am reading everything on his website, listening to his radio show. I'm reading every book, listening to the show, watching the TV. I'm doing everything, soaking this guy's wisdom because this guy is talking to me. I am tired of being the broke financial guy. And the only thing I wasn't doing was Financial Peace University, but I couldn't afford it, and I wasn't going to use a credit card to do it. And so I had a brilliant idea. I talked to the bank that I worked for and said, hey, for community involvement, could I teach this class? Sure. So I taught the class, and it changed my life, Financial Peace University. Because then I made the decision, I'm in the wrong place. I'm in banking, and I'm not against bankers, but I don't believe in loans anymore. I can't give loans out. I was giving loans out for cars, for unsecured loans, debt consolidation loans, home improvement loans, mortgage loans, business loans, ag loans. I was doing loans out my ears. I was getting out loans like candy. I thought I was okay. I thought I was smart. And I realized loans aren't good. The borrower is slave to the lender, as it says in Proverbs 22:7. And my wife and I were living the Proverbs 13:12 life at that time, which was hope deferred makes the heart sick. Later in that proverb paraphrase, it says, but desire to accomplish is sweet to the soul. And I remember when I first started my first job back in the year 2000 out of high school, when I was working full-time for principal, I was a mortgage counselor, collections counselor. I was calling people up, lots of people, hundreds of people a day, saying, hey, you're behind on your house payment, and I hate to be the bearer of bad news, but if you don't pay it, we're going to have to take your house. It's an interesting first job. And even then, even though I knew nothing about money, I knew basic math. Income had to be more than expenses if you had to survive. And I was bold in telling people, you need to go get a job at McDonald's, or you need to get a different job, or you need to cut expenses. And a lot of the time they go, well, I want to talk to your supervisor. How dare you go tell me to flip burgers? It was just simple to me. And I enjoyed doing budgets. I enjoyed trying to help people get out of their mess. But my problem was, as a young 18, 19, and 20-year-old, how do you get broke people to pay for help? I mean, granted, they'll pay $2,000 for bankruptcy, but they're thinking they're getting a fresh start. They may not be. So how do I do it? And so back in the year 2000, I just kind of put that back over here. Well, then it happened when I met Dave, and I went through Financial Peace University, and it changed my life. I mean, my wife and I saw over a $50,000 change in position in 2.5 years by following those principles. And that idea of helping people came back with money, because I've always loved helping people with money. That's why I was a banker. But I wanted to help people the right way, show people how to get out of debt and stay out of debt, how to save money for the future, stop being stressed, stop divorce, because number one cause of divorce is money fights, to be able to save for the kids' college. So in May of 2010, I went to Dave Ramsey's counselor training and began to learn how to counsel. And then that was March 2010, rather. And then in May of 2010, I took the leap, started my own business, Strong Tower Consulting, where we passionately help individuals, families, and businesses and coach them to make better financial decisions so they can create success and eliminate financial stress. 7 out of 10 homes live paycheck to paycheck. 64% of Americans don't even have $1,000 in savings. This stuff is big. And so, Dave, don't know if you're ever going to be watching this, but I want to say a shout out to Dave Ramsey, because not only did he change my life personally, but professionally. That's why I do this show, to provide you hope, to give you hope that you don't have to live broke anymore. You can live with hope again. If you want that kind of hope, go to that website, strongtowerconsulting.com. Click on the free consultation link. I offer a free 30-minute consultation, like with what I did with Alex. That will change your life forever. Want to thank Ryan Norfield, our awesome producer. Want to thank Webcast One and Mac McCoy for using the studio. Thank you for joining Strong Tower Financial Hour. We hope you come back next week. Thanks again.